how many people in the institutional world are still stuck on zero. Literally zero. It's 80+%. Bitcoin is the global settlement layer for all assets. Certainly possible. And no, it's ETH. ETH has more activity. I'm like, the network itself is going to be an increasingly valuable place because it is so decentralized and so secure. I'm so bullish. I mean, it's crazy.
Bitcoin, the pioneering digital currency, has just crossed the $40,000 mark, evoking optimism about its potential as a global settlement layer. Meanwhile, amidst this promising trend, there's an encouraging backdrop of easing financial conditions, indicating a shift in the market dynamics. Financial conditions are experiencing a welcomed easing, while the value of Bitcoin continues its upward trajectory. This positive momentum is compounded by the increasing significance of decentralized networks and stable coins within the digital economy. Amidst this financial climate, major hedge funds are making significant strides, signing up for speaking engagements in London. Simultaneously, organizations like Blockworks are hosting conferences, gathering asset managers and traders to deliberate on macro trends and the evolving landscape of digital assets. Mark Yusko, a respected voice in finance, has often provided invaluable perspectives on the market. His insights have consistently shed light on crucial economic patterns and emerging opportunities. Let's discuss Yusko's analysis of the intriguing intersection of easing financial conditions and the soaring trajectory of Bitcoin. Bitcoin's ascent, surpassing $40,000.
No, it's a thing of absolute beauty. So we're up 12% in the past 30 days. So it wasn't Moonvember, because it was Uptober, up 29%, but we up 12% in November, forced the CEO to step down from his role. And this chart says, I don't care. I just don't care. And, maybe I need a new hashtag, Bitcoin doesn't care. It is in a massive accumulation, just up closing in on 200% off the bottom. And to your point, what people I think miss sometimes is just the amount of money out there that is in these little boxes, these rule boxes. And there's 30 trillion by Eric Balkunius's big number that can't at this point buy Bitcoin directly, right? But they can, in many cases, not all, buy things like MicroStrategy or Coinbase because they're listed companies, as opposed to they UBS won't let me buy GBTC, whatever. But when this ETF happens, that's going to be a dicey period, because then it's like, well, I don't have to buy MicroStrategy, which is a questionable software business tacked on to a big honeypot of Bitcoin. And I don't have to pay a premium anymore for Coinbase. And I think Coinbase will do well because their business is going to skyrocket, right? Because they're going to do custody for these ETFs, and they're going to get ancillary benefit. And when the institutions really come, because yes, there's an institutional bid, but it's with this many people.
Compelling reasons to invest in the future.
Is very simple. Is 0.0 correlated to bonds and 0.15 correlated to stocks? Those are the two lowest correlations of any meaningful asset class, like high yield bonds, hedge funds, private equity, international stocks. If you take anything with, kind of $500 billion and up of value, you could find small things like, stamps or coins that have even lower correlation. But for a meaningful asset class, this is the least correlated of all of them. And so when you add it to a Markowitz framework, meaning, when you take cash, riskiest asset you could ever own because you lose to inflation, and you add bonds, which have more volatility, risk goes down. It's total loss of capital, right? When you can't get to your point, if you're leveraged and you're forced to sell and you obliterate your equity and that's gone forever, you can't earn it back. Like if a stock goes down and you hold it and it comes back, that's not loss. I mean, Amazon went down 94% in 2001, and it's much higher today if you held it. Most people didn't hold it because humans are going to human. They sell what they're about to need. But anyway, so I just thought it was interesting how people are still stuck on this idea of volatility, and volatility is your friend. So what you want are assets like Amazon, like Apple, like Microsoft, not Microsoft, I hate Microsoft, that have this high volatility, but they have long-term accretion to your portfolio. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in, so it's only 4 more years from now, you will be deemed fiduciarily irresponsible if you have zero. I'm not saying you have to have 10 or 20 or 30, but zero is the wrong number. It's kind of funny. Is the only reason stocks look like they go up is because of what gold does. We're pricing those stocks in the toilet paper.
And you know what?
Which went from $1 in 1913. Okay, it's from 1776 to 1913. $1. Which, remember, we took from the Dutch, the Rijksdollar, because they invented the first central bank. And, so the dollar was 1776 to 1913 worth of $1. It had 2 fluctuations around the wars when, we made other things like Confederate dollars and all that. But the bottom line is the dollar is worth $1. 1913 to today, it's lost 97+% of its purchasing power. So when you price equities in dollars, they look like they go up. If you priced the S&P in gold, not so much. So that's the dirty little secret. In fact, stocks, and this is just a short period of time, stocks today priced in gold are the exact same price they were in 1997. Okay. And if you take it all the way back to when when gold was like $30 and they fixed it, it's worse. And so what happens is this devaluation of the currency creates money illusion. You feel like you're richer. Your house goes up and your stocks go up. But remember, that only applies to the people at the tippy top and the all-seeing eye. The people at the bottom don't own stocks. They don't own houses. They have a fixed income in terms of minimum wage jobs, and literally they subsist on government handouts. What's the name?
Bitcoin, unraveling its reign as the ultimate asset.
Bitcoin is the global settlement layer for all assets. Certainly possible. And we're like, no, it's ETH. ETH has more activity. I'm like, no. The activity of trading the token is not what I'm talking about. I'm talking about final settlement of where do you want the ownership record of your home or your car or your business. I think you want it on the safest, most secure, biggest network. Again, if we're going decentralized instead of centralized, if you think about where do you want your valuables? In the old days, you put them in the safe deposit box at the bank. Why? Because the bank was a big, fancy building made with marble columns and thick cement walls, and it was safe. At least you thought it was safe. So then what we do? Well, then we said, all right, well, we can protect it by going away from analog stuff. We won't put our analog stuff. We'll electronify stuff and we'll store them in trusted institutions. banks, brokerages, etc. And that's been pretty good. But the network itself is going to be an increasingly valuable place because it is so decentralized and so secure. I'm so bullish. I mean, it's crazy.
Crypto market prediction.
Then the bear market will be bad, right? Because if you get so far above fair value, then it's gotta drop. But I don't think there's going to be as much leverage this time. I really don't. So I don't think we're going to go as crazy. And so I think the cycle will be more uppish, less downish, and then more uppish.
I have a lot of thoughts. I've got a prediction for you.
The money has not even started to come. It's different, right? It's different than the futures ETF, which that was buy the rumor, sell the news, because futures, they can get naked short on the other side, which is why they approved the futures ETF in the first place. So the banks could go naked short and push the price down so they could accumulate at a lower price. That's been going on for years. This is real. Like this, in this world, you don't get to make paper shares. You got to buy the Bitcoin. And so the amount of Bitcoin that's going to get bought as the money starts to flow into this, and go back and look at what happened with GBTC. When GBTC started to take money in, we went from 10 grand to 60 grand in like 11 and a half seconds. And it wasn't 11 and a half seconds, but it was pretty, just go back and look at that first run up. And then Elon did his tweet and we went down in 50%. We went down 50% on a freaking tweet. And then we went all the way back to 69 because it was because fair value was 30 and we got to, two plus times fair value. And then we had the bear market. So is this going to run, from 30 to 180? Might. In fact, it might run more because the amount of money that's going to go into the ETF, big, really big. I mean, it's just big. It's just big. And there's no other place it can go but spot Bitcoin. It can't buy anything else. It has to buy the actual coins. And that's different. And the problem is there aren't that many to buy because you got the lost or stolen, you got the locked, right? Where there's a multi-sig problem, or you got the hodlers. Now, I'll never sell. There's a price. There's a price for everything. And that's the way markets work, right? So I won't sell. Would you sell at 100? No. Would you sell at 200? No. Would you sell at 500? Maybe. Maybe I sell a little bit.
The milestone of Bitcoin hitting $40,000 amidst easing financial conditions underscores the dynamic nature of the markets. As frustrations linger over tech issues within major corporations, the enthusiasm surrounding Bitcoin's potential as a global settlement layer continues to grow. The participation of significant hedge funds in speaking engagements and conferences further emphasizes the profound interest in macro and digital asset discussions. We encourage you to stay updated on these developments as the interplay between traditional finance and the emerging digital landscape hold the promise of reshaping the future of investments and financial systems.